Hi everyone, I'm Jonas Schulman, Head of Communications at Security Token Market. We are at Vertalo Conference, and I'm here today with Steve McKeon, partner of Collab+Currency. Thanks for coming on today.
Yeah, happy to. Thanks for having me.
So for those of you who don't know, Steve is a legend in the security token industry. He wrote the security token thesis on Hacker Noon in September of 2018, I believe. And it has been my Bible for trying to learn about security tokens, so thank you for writing that. I'm sure it's helped a lot of people, including myself.
Thanks. No, it was a pleasure.
Yeah.
It was, the first article was called Traditional Asset Tokenization in 2017, and then I realized I left a bunch of stuff out, so then I followed it up with the security token thesis.
Cool. Well, it's a great article. I implore anyone to read that. But yeah, I'd love to learn more about Collab+Currency, your background, maybe the moment you got into crypto, like did someone like, oh my God, look at Ethereum or look at Bitcoin. What was like that moment you found crypto and the aha moment, you're like, wow, this is the future?
Sure, so the story was that I've been a finance professor for the last decade. Okay. And so I've been thinking about securities for a long time and writing academic articles about securities. And I had another startup, and when we were in the process of selling that, I decided the next thing I wanted to do had to be at the intersection of finance and tech. This was in a totally different field. So I looked around and I was like, well, it's got to be Bitcoin, right? So this was probably like 2015.
Right.
And so Bitcoin was kind of the, Ethereum was just launching. And I thought, I'm going to just learn everything I can about this. So I cold emailed all kinds of people, like Patrick from Overstock and like nice. Brian Armstrong from Coinbase, and I was like basically asking them to give me data to write a paper on. And so anyway, a guy named Adam White got back to me from Coinbase. He said, listen, we're not giving you any data, but you should meet this guy Chris Berniski because he's also thinking about valuation models. Chris was with a company called ARK with Kathy Wood at that time, and he was writing a book called Crypto Assets. And that really was like the moment, like as I was, did some calls with him and was reading through the book, I was like, this is going to change everything in terms of the way finance works. And so that was really the entry to the rabbit hole, I guess.
That's such a cool story. Y'all talking to all those big players before they were even, where they are now. It's so cool to see Coinbase is public now.
It's amazing.
It's come a long way.
Watch the whole industry.
Yeah, you've seen Brian from the early stages from Coinbase.
And in fairness, I've never actually met Brian. Okay. But this Adam White, who's now also with a different company backed, but was really critical in making that connection to Chris.
Very cool. So how did that segue into Collab+Currency? What is the investment objective? It's an investment fund, correct? And what kind of products are you investing in, et cetera?
Sure, so I guess the progression from there was like after I'd sort of gone down the rabbit hole, I thought like I'm going to start writing. And so I wrote these articles we mentioned, and an old friend of mine, Craig Shapiro, who's the guy who started Collaborative Fund, he had read the articles and they had started to see deal flow around crypto and blockchain because they really had been doing peer-to-peer investing for a decade. They were in things like Lyft and Reddit and Quora, like pre-crypto, right? So people were sending them deals saying like, this is like totally a peer-to-peer play. So he called me up, he said, hey, I know you've been writing about this stuff, you've been thinking about it, like we should find ways to work together. So Collaborative invested out of the main fund for a couple of years, and then in 2018, it was clear that the space was expanding rapidly in all directions, right? Like there was security token stuff going on, there was the early stages of DeFi, there was like the ICO boom had happened, like it was kind of going crazy in every direction. So we just decided we need a dedicated team and a dedicated effort around crypto, and so we spun up a separate vehicle called Collab+Currency, and that was sort of the origin story. So these days we invest across all segments of crypto. Like our mandate is blockchain and crypto exclusively. Anything that's within that basket we can invest in. So we've done everything from regulated products, around security tokens. We've done layer ones. We've done lots of DeFi. We've done NFTs. We might be most known for NFTs at this point because we've done a lot of those over the last 18 months. And now, like as you can see on the horizon, there's sort of like DAOs and DAO infrastructure and social tokens, and like the space just continues to expand in a million directions.
It's pretty crazy to watch. Like the blockchain use case is really just blossoming. You have, like you said, DAOs, you got DeFi, you got NFTs, you got utility tokens, you got security tokens. Like probably a lot of things I haven't even come across myself. It's really hard to keep up. NFTs are really cool right now, and I think I've talked about this to a lot of my colleagues and friends, etc. about I really think NFTs, it's new in a way, but it's also something that we've seen for evolutions in terms of where value comes from. It's like a psychological phenomenon. It's like, you know, CryptoPunks are really popular. I know they're like pixelated JPEGs. When you really break it down in its simplest way, tangibly, technically, it's worth, you know, it's not worth a lot. It's like, you know, it's not physical. It's not even good quality technically, and like a good camera if you compare to a good picture, in my opinion. But then the value comes from, it's crazy. It's like, it's almost where the same value where Bitcoin comes from, where it's like social consensus, the psychology behind that. People believe it has value, and it's a brand, just like Gucci or like.
That's right.
You know, so what are your thoughts on where the value of NFTs come from?
Look, I mean, it's a very social technology, as you mentioned. The value really comes from community.
It's powerful.
And you can see, and like humans innately like collecting things. Like that has been true forever, like way, way before crypto, right? And so, like when I was a kid, it was baseball cards, and like every generation has had like the things they collected. And part of why I collected them is like I liked getting together with my friends and like opening the pack of tops and like seeing what everybody got, and like there was a social aspect to it. CryptoPunks are really just like the next evolution of that. It's actually not a new phenomenon, it's just a new format for the phenomenon that's existed for a long time. And so, so you have these communities forming around NFTs, but I would say NFTs are going to be even more broad than collectibles and art eventually, because an NFT is really just a wrapper. It's a way to wrap something unique and put the ownership record on chain. And so it's interesting because we invest in all these verticals, as I mentioned, everything from, you know, regulated assets to DeFi to NFTs. We see all of these things merging eventually. Like DeFi and NFTs are already starting to merge, where there's now like yield generation mechanisms and cash flow generation mechanisms around the NFTs. We think that certain regulated products will be wrapped as NFTs. So, you know, I mentioned earlier, like, if my mortgage were on chain, that would be an NFT. If my insurance contract were like for my car were on chain, like that would be an NFT. NFTs are going to wrap all kinds of unique financial contracts, many of which might be regulated as securities, which then brings you back to the regulated side of the investment thesis. So like ultimately this stuff is all going to sort of blend into one ecosystem.
Because at the end of the day, NFT just means non-fungible, means it's one of one. So your mortgage is your mortgage, so it doesn't have to be a collectible in a way, I guess is a good way of looking at it.
Like in the world, the majority of financial contracts are one of one.
Interesting. Yeah, that makes sense. They're unique,
We spend a lot of time thinking about shares of stock and bonds and things like that, the fungible side, which are mostly the investable assets. But mortgages, employment contracts, insurance contracts, like most contracts are actually one of ones.
That's pretty amazing.
And so if you believe that most value flows are moving on chain in time, those things are all going to be NFTs.
It's pretty amazing. Like that exact use case, there was a security token that did this. Obviously it's one share, I guess. It's a premier Mexican soccer team. I don't know if you've heard of it, Club Necaxa. They did an NFT, but it represents, I think, 1% equity stake in the Premier League team or the Mexican League team. It's so cool to see that. It's a really cool use case. So you mentioned this a little bit offline, but you're talking about different liquidity mechanisms in the blockchain space. What is your favorite liquidity mechanism? Automated market makers?
Yeah, so I think that, this really goes back to this idea about everything blending together and how can we take innovations that are happening in one vertical and port them over to one of these other verticals in a way that makes sense. So one thing we've been thinking about for a long time is liquidity for regulated assets, right? It was one of the big pieces in the security token thesis, years ago. Was maybe these things can create deeper markets, which is conceivable in and of itself, even if trade happens in the normal way where there's counterparties and whatnot. But what we've seen and this was mentioned really briefly in the article, But after the article was written, we've now seen the explosion of things like Uniswap and Balancer and like all, Sushi Swap, all of these AMMs. And so you can't help but think like, wow, wouldn't it be awesome if you could also use this type of format for securities? Because frankly, like when you bring a lot of private companies on into like trading environments, some of them are small, like they're just not going to be that much volume, but you still want liquidity for those assets. And so wouldn't it be cool if like the issuer could take a pool of shares and a pool of some trading pair, like a stable coin, and seed the initial sort of like AMM, and so people could come in, and even if it was just one person a day, there would always be a ready market for those shares. There would always be a quoted price for your trade. The tricky part is that because it's a security and it's regulated, you have to sort of gate who can come into that trading venue and who can't.
Right.
Which something like Uniswap is just wide open, right? Anybody with a MetaMask can engage, can trade, which is in one way the beauty of it, but sort of doesn't work super well for a regulated product like a security. So we spent some time looking at things like Balancer private pools, and I'm sure there's going to be more innovation around this area. It feeds right into this concept of identity, like the way that you would potentially gate access to these regulated trading venues is with some sort of identity solution. So we've also invested in a company called Ceramic, which is working on that, sort of tying a bunch of these wallets together, and then maybe somebody issues like a token that represents a KYC process. And you use that token to like
so it kind of mirrors it in a way?
Exactly. So like somebody runs the KYC process, they issue you a token, the token sits in your wallet, it's attached to your identity on Ceramic.
And it allows you to float it anywhere.
Allows you to go into a regulated trading venue and participate in a very like autonomous way.
Interesting. So we, as you know, we track security tokens from all different types of marketplaces. We actually track about 90 something from Uniswap or LevinSwap, but Uniswap was before. And so, what do you think about this aspect of it? You can whitelist investors to use on Uniswap, because it basically says to the protocol like you can only trade with this person, blah blah blah. But what do you think about that use case?
I think it's what we need to do now. Like that is the way to initially solve the gating mechanism in terms of who can come in and who can't.
It's regulated. It just uses the decentralized finance technology. It's still regulated, but I feel like the SEC maybe be like, well, you're in the same realm of these other crazy assets like SafeMoon, etc. All these other.
But I think like if you can show that like you're taking the steps to KYC and like basically do everything on the up and up, that's going to go a long way with the SEC. I do think that like in the longer run, whitelists are going to be hard to maintain. Like I think that piece of it does need to get decentralized, where you've got one party doing KYC, issuing a credential that then can be used on a different platform, and that, like as we've seen with things like Ethereum and everything else, like when you can get a whole community building solutions, it ends up being much more powerful. But in the early days, I do think whitelists are probably like a feasible way to move forward on that idea.
That's definitely interesting. So you have a very in-depth understanding of security tokens and blockchain. You've been there since very early stages. What do you think is like the biggest roadblock for us reaching mainstream and having, retail trading and just all assets tokenized, I guess?
I think it's mostly an onboarding problem. So I think just more investors need to get onboarded into these systems and like have a wallet, whether that's a self-custody wallet or a wallet at like a Vertalo or a T0 or whatever. And then just onboarding of more good assets, right?
And like drive people to use,
It's the challenge with every marketplace is you got to get both sides of the marketplace to kind of show up at once. I guess it's even more complicated with security tokens because there's multiple, like you've got the buy side, the sell side, and then you've got the underlying product, the asset itself. You need all of those things to kind of come together in concert, along with all the solutions around custody and like all the infrastructure that's required to sort of like do all of that in a regulated environment. But it's happening. Like it's been a long time to get all that stuff built. But like we're starting to just see more and more momentum around these things, and like there will eventually be a tipping point.
It feels like you just kind of have to play the long game, try to get rich quick, just build, and eventually they will come.
It's definitely the long game. I think anytime you're building in a regulated environment, you're playing the long game.
For sure.
But if you can solve it, these are some of the largest asset markets on Earth.
It's amazing.
So it's going to be exciting to watch it unfold.
Well, thank you, Steve, for coming on. I had a great time talking to you. For the interested people that are watching, if they want to connect with you or learn more about what you're working on, where can they go to do that?
Yeah, easiest ways would be on Twitter, so at SB McKeon, or on Medium. If you just Google Stephen McKeon Medium, I'm sure you'll find the site.
Perfect. Well, look out for this on YouTube and social media. It's going to be an awesome interview. Thanks, Steve, for coming on.
All right. Thanks, man.
For sure.